Today, I'm going to show you exactly how to make $325 for a 1-month trade. And the best part is you keep the $325 no matter where the stock goes. I'm talking about trading a good quality stock, but instead of putting up thousands of dollars in capital, you only need a fraction of that, because I'm going to show you exactly how to trade an ETF that's a lot cheaper, that moves just like the stock. Now, last year, I literally made $263,000 trading this stock, and right now it's at an all-time low. So there is no better time to put this trade in. Now, before we jump right in, please do me a favor and click the subscribe button in the bottom right-hand corner of your video. I'm making a video every day for 1,000 days, and today is day number 146. I really want to have 5,000 subscribers before the end of the year. More subscribers means that more people find this video, and I can help a lot more people create income for themselves and ultimately the lifestyle of their dreams. And a sincere thank you to all you guys who have been watching my video and commenting and liking and subscribing. I really appreciate that. Now let's jump right in. Now the stock I'm talking about is MicroStrategy. This is a chart of where this stock traded last year, and here's a chart of where it's traded this year to date. And as you can see, it's come way down since July. And right now it's trading at $177.18 per share. That's why it's the best time to trade it, because it's so low. And it's tracked to Bitcoin, and Bitcoin will only go up over time. Now the ETF that tracks MicroStrategy is MSTX, and it's a leveraged ETF. And it's only trading at $5.53 per share. Now this ETF isn't good for a long-term buy and hold strategy because it rebalances every day, but it is good for trading options that are short-term, and I'm going to show you in this video exactly how to set it up. Now if we look at the charts side by side for a 1-month time frame, you can see that they move together. What we're going to do is this. We're going to pull up an options chain on MSTX. And you can see the expiration dates down the left-hand side. Now we're going to choose December 26th because that's 4 weeks away. So this is a 1-month trade that we're going to do. What I'm going to show you is how to ladder the same expiration date but different strike prices. That way we're going to be paid to wait for a crash if it crashes, and if it doesn't, we're going to keep the premium anyway. So we're going to use one expiration date, December 26th, and we're going to have 3 rungs on the ladder, with sizes increasing as strikes get safer. Let's walk through it together. Now, like I said, MSTX is currently trading at $5.53 per share. So the first step that we're going to do is we're going to sell one $5 put. Now, one thing to keep in mind is that when you're trading leveraged ETFs like this, there's often a wide bid to ask spread. In this video, I'm going to illustrate the prices using the mid price. But just know that if you were to make a trade like this, your fills might be slightly different. Now, I want to remind you that I'm not giving you specific trading advice. I don't know your specific scenario, how much money you have, what kind of investments you already have, how much risk tolerance you have, those sorts of things. I'm showing you trades that I make, and I've been living off my options income for years, and I'm showing you how to structure these trades using different tickers and different strategies. So the first step is to sell this one $5 put. And we can see here that the mid price is 82. So that means on this particular leg of the trade, we're collecting $82 and we're committing to buy 100 shares of MSTX, but only if it drops below $5 per share before the contract expires on December 26th. So on this leg of the trade, our risk is $500. And remember, we keep the $82 no matter what happens. Next, we're going to look at a $4 strike, and we're going to sell 3 $4 strikes. And we can see the mid price of this particular contract is $40. Now the reason we're selling 3 is because we want to increase our size as the strikes get safer. So for this leg, we're going to collect a total of $120 in premium for the 3 contracts, and we're committing to buy 300 shares, but only at $4 per share, and only, again, if the stock drops below $4 before December 26th. Now our third leg is going to be a $3 strike. And we're going to sell 5 of those with the same expiration date of December 26th. And we're going to use the mid price on this contract of $25. So for this leg, we're collecting a total of $125 and we're risking $1,500. Now $3 is very far away from where the stock is trading right now. And so I'm totally okay buying 500 shares at this price if the stock drops. That would mean I'm getting a stock that I like anyway at a significant discount. Now let me show you visually what we're collecting and what we're risking. So the total amount of capital we put up on this trade is $3,200, and we're making $325 in cash up front, and we're holding the trade for 1 month. If MicroStrategy crashes and MSTX crashes with it, we'll end up owning 900 shares, but because we bought more as the price went lower, our adjusted cost basis will only be $3.19. That means if that worst case scenario happens, we can sell 9 covered calls with a strike price of $4 and get paid again to commit to sell our shares after it pops back up again. And because this ticker has a lot of volatility, I'm confident that there will be a lot of options where the stock pops back up. Now, of course, there's always going to be risk. So maybe MicroStrategy goes out of business and this ETF goes out of business with it, which is why you need to make your own decisions and evaluate the likelihood of something like that happening. But me, I believe in MicroStrategy and Bitcoin and Michael Saylor, who runs MicroStrategy, and I feel like this is a great risk to reward trade. So what do you guys think? Can you guys totally see yourself putting trades like this, creating income for yourself on a regular basis? Instead of buying stock and hoping and praying and waiting for it to go up and then selling it to make money, no, you're putting cash in your pocket right away. And listen, there's only 2 strategies to know: selling a put, selling a covered call. That's it. You will literally spend like 15 minutes a day making trades like this. And the best part about selling puts, like in this video, is that you keep the premium no matter what happens. It doesn't even matter where the stock goes. If this video is helpful, smash the like button, subscribe to my channel. Like I said before, I'm putting up a video every day for 1,000 days, talking all about puts, covered calls, walking through different strategies, different tickers. If you want to see a video on a specific ticker, let me know and I'll do that next. Thanks for watching and being a part of my channel. Cheers for now.